Hi folks, Larry Berman here, and here's what's on my radar this week. So last hour of trading Friday, and you can see from last week's comments that reversal that we highlighted where Fed's Bullard came out and basically talked about easing in 23 and 24, created the bottom. That low was exactly at the 38.2% retracement of the giant bear market that we've seen so far this year. And so as we're sitting here late Friday, beginning of May, end of May, we're now positive on the month. So it hasn't been a sell in May and go away as we sit right here. It's been a buy the dip in May and make some hay, as I suggested a couple of weeks ago. So anyways, our indicators are set up very interestingly here. You can see obvious supports or resistance starting to build. The clear high at 4,300 from the post-Fed spike, and really around 4,200 is where the S&P starts to get into trouble. Let's have a look at the quality. So here's the ARK ETF. We've used this for a long time now to try to figure out, speculative, bubble. There's a lot of good names in here we like for sure. What's leading the rally? What's lagging the rally? When we kind of look at it, it seems far more short covering led than it is real money at this point. Make no mistake about it, there's money to be made and money is moving. Let's look at where the big pain has been in terms of the broader market. So the NASDAQ, again, at the same time the S&P was hitting major technical support, was flirting with the 50% retracement of the entire bull run from the COVID lows to the highs seen in November of last year. You can see my trading desk is sending me some notes there. Initially, support came in at the 38.2 for the NASDAQ. Remember, the NASDAQ led the move down. We bounced off that. In fact, quite a ferocious rally here for almost 3 weeks, right back up to the 200. It failed. So the first test here is around the 50. When we look at where the 50 is sitting right now, 327. Let's blow this up a little bit and have a look at what 327 really means. And so from the falling 50-day average over the next week, that's in this range of the lows that we saw here, around where the 38.2% was. The fact that it got back to those levels, couldn't get above, and those were the failures in late April and early May. Remember, this is 4,300 on the S&P 500. So we think we're going to get up and test that range. Right now, unless the news gets an awful lot better, that's where it pauses. So that's probably this week's trade and maybe into the mid-June FOMC. In terms of bull and bear picks of the week, we're talking about them now. The trade here is to be long for a trade in whatever it is that, there should be some momentum still left here. We've had back-to-back days right now as we sit where the NASDAQs and the Qs have had a 3% move. So it tells you it's the oversold speculative stuff that's moving. You've got a little bit more upside there on a trade, short-term in nature. We're not yet at the place where long-term investors should feel comfortable about putting money in and not worrying about it. We still have some economic damage to come. We'll see what the tightening brings. We'll see how sticky inflation is. We'll see what a fiscal cliff is like when the Republicans control both houses of Congress come November, and what that means for spending and growth in 23 and 24. Lots to think about, lots ahead of us. For now, there's a little bit more bounce to go. Have a great week, everyone.